Well, John, what do you want to talk about today?
Well, we had the reports last week. We already went through the numbers. We'll go through what the outlook is for 25 and 26 crop. I want to go over that for sure. We'll talk cattle, of course. You have to talk about the market that goes up nearly every day that the entire world's talking about.
Don't forget American Federal and, banks.
Interest rates, yes, our spot. We're going to go over the interest rates. Unfortunately, there's not a lot to talk about this week, but we'll go over that. And then we've been meaning to do an episode, and I'm trying to remember what was the big deal. I made a big deal not to forget.
Welcome to Hedge Heads, where hosts John Prischman and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, the last 3 episodes after I've hit stop on the recording, you've said, I wanted to talk about storage.
Yeah.
So why don't we start with storage?
We remembered. Yeah. So it's what hasn't worked and what may work. We'll go over that. So the first thing is that people buy it and it costs a lot for new storage, getting more expensive every year. And so if you buy something, you intend to use it. I mean, you don't buy it to not use it. So the first mistake in the mentality of it is that I bought it, I must use it.
When you say buy it, you're saying like
the actual
cement
physical
and the steel,
everything,
and
the labor.
They put the storage up.
Yep. You buy the storage. You were buying the storage.
These aren't
I don't
the
think
old school silo I had on the farm that I
the
grew
blue
up
silos, which my uncle sold, harbor store silos, and they had you convinced that you had made it as a farm if you could have the blue silo on there, and they were very as hot as anything in farming can be.
I remember that.
And then it was just as quick as it was hot. It was out of style that quick.
I thought everyone who bought them went bankrupt.
Yeah, there was a lot of that, and you don't see too many, but you do see some sticking up every once in a while. I don't know, but I know that it was a status symbol at the time, or sort of. And it was pretty poor times, and right. Everybody had to have them if you could afford them. But now it's just gone to what you would think the storage. I mean, silvery, with some sort of name on it. That's usually the storage company. And big giant cement pads. They spend a lot of money. It's gone up substantially from probably a few years ago, and so if you buy it, you're going to use it, or at least that's certainly the mentality around here. I mean, by golly, I'm gonna use this, and yeah, there's not. So then that's your first huge mistake with storage, is that it is great for some years, terrible for others. A lot of other years are going to be hard to tell, and that would be why you would have storage when you don't know. This doesn't seem like one of those years, and one of those years that I would be talking about that you don't know the answer to yet is when the yield can continually go down, and you want to store it till at least January to see what the final yield is. Very understandable that one would want to do that. Also understandable that you wouldn't want to pay 5 cents, storage a month or more. But the issue is that there's a lot more choices than that out there. Many combinations with storage. I have clients with no storage. I mean, you'd be surprised at what people do. Now, why do you store it? For me, there would be one reason and one reason only. Sometimes there's a second reason. That hasn't been the case lately. Second reason would be tax deferment. You don't want to take all your income you want to do it over different time periods. And then the number one by far would have to be basis. Otherwise, there would be no real reason to hold it, when you can own it on paper if you understood how that worked. But basis is a big one. So if it's minus 60 now, you hold it to minus 30, you've gained 30 cents by doing nothing if it was the same price. And also, as supplies dry up, the price goes up. So anyway, that's the short history of storage. But it's got to be very popular. It's got to be this is what's going to help me market better, which I find I don't think that's true at all. I think it takes some pressure off. But what's happened is guys have stored it to spring into summer and lost a lot of money to do that. And it's not working the same way that it used to work. And that has everything to do with South America, has everything to do with our production keeps going up. So these old things, and I used to like the bull spreads in the spring, like the May, July bean spread, the May, July corn spread, like even on paper it would tighten naturally and we'd have a better market by spring. So that's where most guys are. That's what they know, that if I hold it, it's usually better, especially in soybeans, which isn't as popular to store as corn. But that's just not worked. So what should a guy do? I mean, what's your first thoughts?
Well, my first thought actually is if I have grain in storage, there's a lot of opportunities that I can do from a hedging side.
Yeah.
So that's my first thought. My second thought is you're going to, to your point, I certainly understand if I have bins, I would want to use them.
Yeah, that's the first instinct.
I also think you have to look at the market.
Yeah.
But again, the biggest thing to me, if I have, and I will get to it, I'm sure, but if I have corn stored, there's some things I can do.
Yeah.
So,
yeah,
go ahead.
And that's going to be the guys that are a little more advanced on the marketing, like selling calls against corn and storage. But many people don't do that. The majority of people don't. They just simply store and then store to what they think is a good price or the deliverable agreed upon time frame that they had. And then there's logistics also. It's not like you can just take everything off a farm and just dump it at the ethanol plant if it was a good price, even if you wanted to. So that's part of it as well. The logistics of harvest and time that it involves, but they're using it as a crutch for a better price, and it's not working anymore. Is it going to start working? Well, the production's going to have to go down for that to start working, or demand's going to have to pick up. We had record demand in corn exports last year, and I think domestic was near record, yet storage isn't working. We're overproducing. So it brings me to what you should do with storage. What you should do is, if you put it in, mentally be prepared to take it out immediately. And I think that's where a lot of guys get lost, is that they don't want to do that. They'd rather sell it incrementally, and that had been working really good until recently. Last couple of years, last 3 years, it's been a disaster doing that. Incremental sales, I'm a big fan of on a rising market, but now it's been incremental sales into a dropping market. And then big blobs at the end towards the lows is what we've seen, because we haven't had the rallies that you would normally have holding into springtime. The high was February this year? Last year?
Yeah.
Last year, I think it was more in the May timeframe, a more traditional timeframe. And then you go back and there's been a handful of years you were better off selling it out right off the combine. There was 3 or 4 years like that. So you start throwing these numbers around, and this whole just store it until spring isn't true at all. You really have to recognize what kind of year you're in. Before it took off in the biggest storage, bonanza would have been 2020. Basis was good for 2 years in front of that, and that was because of the short crop in 2019 that existed on paper only. And then by 2020, with a good demand, it completely vanished very quickly. That year, storage was king, and then basis, inverted, everything was awesome. And guys are still riding that wave mentally, like this is going to show up again.
Right.
So I'll just put it in a storage and hope for better days. And that's not really a strategy at all. It's helpful to have it, there's no doubt. But back to what I was saying, you want to be able to put it in and a week later take it out and have that mentally ready to go, because that's the markets that we have. That we've been dealing with. It's been very up or very down, and there doesn't seem to be a lot of time to think about it. But I don't think guys think that way. And I'm talking, this is a bear market. I shouldn't say there's a big difference between a bull and a bear market. We will cover storage in a bull market. Yeah. This is storage in a bear market.
Let's hope we have a bull market in the next 2 years and we can cover it then.
One would think that it's going to happen, because demand is phenomenal for corn. Beans is changing rapidly, and we're hopefully going to find a home for those beans. But in a bear market, you want to have your hand on the bin door, getting ready to get rid of it when it allows. Look at what's happened since the report. I think we're almost above where we were before the report in corn. I think we are actually. I think it was down 4 that day before the report, or 5. So I think we're actually above that price right now. And what happens? Ask yourself, what happens if we come up another 30 cents right as you're harvesting your corn? Maybe it's not going to even go into storage. I mean, have a plan, have something. Now, once you sell it, here's why I think guys keeping a storage too long. They think it's final. It's gone. And that's one way to think about it. You can re-own it via calls with limited risk or futures. Or if you don't have storage, you can sell it and you can re-own it. So that's the piece of the puzzle I think a lot of guys are missing. They don't know the combinations of things to even do if you don't just store it. Hey, that's too complicated. I'd just rather store it, and then I don't have to worry about any of that stuff. And it happens a lot in life in general, where people just, the path of least resistance is the one you're going to do. I heard my neighbor got in futures and he lost the farm, or almost lost the farm. I'm never touching that stuff. My dad didn't do it. You're going to have to up your game and be a lot more flexible, from using elevator programs to better storage techniques, and then recognizing what year to do what. This is a bear market. So long story short is, don't fall in love with long time frames. Get while the getting's good, because all your neighbors are going to be thinking the same thing. When do I sell in this rally? Is this all it's going to be? What are we going to do? The outlook is pretty grim, but that's right now. Things can change. The crop tour is out there. What have you heard? Did you poke around there on Twitter to see what they had to say today?
The only thing I paid attention to the crop tour was all the tweets today that said no one on the crop tour has an agenda. So because everything last week was everyone on the crop tour has an agenda. So now the crop tour today was saying there's no agenda.
It's everybody's so offended with everything. Every day somebody's outraged. I mean, that's why I have to walk away from it. And a lot of people should. I don't really think the real life like this. I think people are frustrated with the high input costs and the low prices, but there's just all this finger pointing and blame. It's really boring. I wish they would talk about something else. It's almost like high school, and it's just very dramatic. Doesn't need to be. Tensions do get high with a pro farmer tour, though. Wasn't there there's some cops called one year. A gun might have been pulled, because they do go on people's property and just do it. And then the theory is that it's big ag, and they're making a picture of something that's really not out there, and it's really to depress the prices. You get a lot of this stuff. Information travels. People love telling these stories. And it's really, there's tensions are high, and people's feelings are really out there. They're very vocal, but they go through the same spots every year. Might as well see what they say. I find it interesting to see what it looks like year to year. I think I saw that the bean pod count was really high in Nebraska. It's hard to know till the end of the day when they have their summary there, but it's much ado about nothing. I think it's very dramatic, as is every topic suddenly nowadays on Twitter.
Well, and especially in a market like this, where there's definitely some unhappy people with where prices are and trying to figure out what they are going to do next, to throw tour stuff that might not agree with what you want to see.
Yeah,
can cause tensions to rise.
It does, and when payments are due, you get that, and your feelings boiling over. But I think that what you should do is to look to see if there's anything you can do about it. Not the answers aren't all here. I'm not saying that, but Is there anything I can do to make my situation better? I think that's a little more constructive. That's what we try to do here. Put out ideas to help. That's the point of all this. If there is anything, sometimes there isn't anything. Sometimes it makes it worse. But if it was me, I would spend more time looking at combinations of things that could help on the farm. I have guys that have accumulator contracts. They did the math and it works for them. Some years that's going to bite you, but in bear years, they've had really good luck with them. Learn about that. Learn about what we do here. Can I do this? That's what my clients will do. They'll call like, hey, here's the situation. I don't have storage for this. I got to sell this. I do want to hang on to it. What can we do? And then we'll start coming up with ideas. I would look for more ideas and be less pessimistic about everything, because you're not going to change the numbers. That's the thing. It's like a lot of things in life you can stew over.
The reality is the earliest the numbers are going to change is what, January?
Yeah, I mean, you're going to have some. I mean, if you start coming down in September and October, then they're going to assume November and January is down. You can have more supportive numbers now, but it is what it is until, the final yield. And it's going to be hard to change a year like this where it's really not getting damaged at the end. Although if you go online right now, you'd be convinced it's burning up and dying.
Gosh. Yeah.
But this happens
There's
every
only
year.
half the kernels inside all that.
Yeah, and I think online stuff really hyper focuses on people, the completely the wrong things. Rarely do you see tweets that are helpful. You do every once in a while. Yeah. Hey, if you have this issue, why don't you look at doing this or this or this? But more often than not, what sells, which is hot, that's hot stuff now on Egg Twitter, is to be seen and being an influencer. It's crazy that it's involved in Egg, and you make money by doing that. So you need to say things that get a lot of views. What gets a lot of views? Things that get people angry. And you just go around in the circle and you really do nothing to help yourself. So my advice is to look for ideas that are going to help. The numbers are high. They're going to stay high. The bean numbers really changed. So what are we talking about then? Well, we were talking about November beans. What I would start planning is, well, if there's a lot of corn acres this year and corn's low, what can you do for soybean acres next year? Are there going to be a lot? Is there not going to be a lot? There's a little. There's probably going to be a lot. So I'd start planning for strategies on November 26 soybeans, on what I'm going to do if it gets to a price that I like. And that's where I would begin trying to break the cycle by concentrating on next year. Same thing with corn. We're at $4.50 for December 26 corn. It's not the worst price in the world for the fundamentals we have. What if it goes to $4.70, $4.75 in the next 3 weeks? Do you have a plan? So that's where I would concentrate. I'd start concentrating on things that you can help, and looking forward to next year, because this is happening with corn. How is it going to affect next year? And that's going to be helping a farm out a lot more than thinking that the Pro Farmer Tour is out to get everybody right after the USDA, and it's really not out there at all. And pretty soon they're going to figure out it's 153. That just won't put any money in your bank account. Farming, thinking like that. Now, the main argument is you might not like the system. I don't like the system and how the numbers and how they influence it, but it is a system you have. So if you want to make changes, go, be a politician, or we get involved in groups that can make the changes on how you measure this. But back to what we were saying.
Or respond to the surveys.
Yeah, respond to the surveys.
I mean, that's part of it, isn't it?
Yeah. In a bear market, get ready to take it right out of storage if you need to. Now, the better question is, what do you think they're going to do with all this corn if these numbers are anywhere near right? What have you heard?
I have no idea. I mean, I guess it's a good thing a bunch of guys built storage.
Yeah.
I mean, honestly, what else are you going to do?
We're going to find out. There's not enough room for on-farm storage and commercial storage for what we have out there. Barnesville, where we go by the interstate in the winter, they've had a big corn pile out there. I know nothing about storing corn outside in the winter other than it looks really rough on top. It's all black generally. And it makes it through it, not all of it.
Right.
But they do put it outside. We see it every year.
The inside storage still has corn in there. I looked yesterday when I went.
Oh, did you see it? Yeah. There's still corn around. So we're gonna find out what's gonna happen here. It'll go somewhere. Maybe they're gonna fence off the back, the fringe 40 on the farm and start putting cattle in. The corn will end up going somewhere, but we will test the whole system this year. No one knows what's going to happen.
Right. Speaking of bear markets, let's go to the bull market of cattle.
Yeah, the opposite of the grains. Yeah. We've officially pulled ahead of cash. I would say where they consider cash. It's 230 to 234 in the south. Higher in the north. And we're 237 August today. We're at cash. Feeders are ahead of cash. For the first time, cattle's more expensive than it probably should be, especially for the feeders. Not if it continues to go up. We had the news that the border is going to remain closed on Friday. That really for Mexico and the screwworm, and that really got cattle going. Is it going to follow through? I am actively talking to guys about hedges. Call if you want ideas. Is it expensive and risky? Absolutely. But we're getting, I wouldn't say all the warning signs I'm looking for, but they're starting to come, where futures are ahead of cash. Cash is going back and forth a little bit. The bids drop lower in the week from where they were higher in the week. That's something so you're starting to see different patterns. But most importantly, we're headed to a time of year where people go to college. People go back to school. The weather cools down and the grill starts to cool off a little bit. And we're not grilling and doing what we would normally do with steaks like in the middle of the summer. So demand starts to come off. That's the part we haven't seen yet. They've slowed the kill down. That means there's less meat around. You should see very supportive, on the cutout and box beef, and it is. And it's been going up sharp, and futures are up. But this should be the final innings of quite the deal we got going on, unless the cattle supply gets even tighter. That's the one thing we don't know. But this is the height of the bullish news. It would take a kind of a spectacular story to top what's going on. And that's generally how markets end. That's the truth about it. The border's closed in Mexico. The Brazil tariffs 50%. So that's the two big areas where beef would be coming in. So it can't get more bullish unless demand goes up, cash cattle goes up, and supply gets lower. And is that possible? Yes. Otherwise, you're getting towards those numbers where it starts not making sense, like $8 corn. I mean, what are your thoughts on it?
I don't have any, and that's why I'm listening to you.
Well, it is a market that's never happened before, and anybody can talk about it, but no one's ever seen anything like what's going on. It's really hard to quantify what's too expensive, what's not. If demand were to start, the box beef and everything were to start dropping, I would be a lot more confident to say a top is very near. We still haven't seen. I'm looking for 3 or 4 things. I'm seeing 1 so far. Yeah. So.
I mean, I will say that I did buy some puts for myself. I'm looking at a more lottery ticket, but I took very low risk on them as well.
Yeah.
And monitoring the market, because I do agree with you that the things likely to make it go higher, we're running out of them.
Yep.
Right. But at the same token, and here's why I look at my puts as lottery ticket puts, is it doesn't have to go down.
No.
It doesn't have to go higher, and it doesn't have to go down. It could sit here for a long time. Yeah. So, I think the most likely answer is that we kind of stay in this real tight range for at least a while.
If it does through fall, I'll be impressed, because normally you'll see demand really drop off. And then the speculation side, that's the one where they're not making any more money. Then they want to put that money that they made into better use to make more money. So that on the speculation side and the investment side that these guys have a lot of money made on, if they get out, I think it's going to be really ugly, especially if there's some news involved. Let's say Mexico border opens at the same time cash is coming down. Then I think you would see a really, really sharply lower cattle market on people exiting on the speculation side, probably driving it far too low. So there's a lot of different things that could happen. Like you say, it could go sideways up here, finding that equilibrium. But usually markets like this end very violently. I would think that this one is going to too. One guy had a good point I read on Twitter today. I don't remember his handle. He was saying that they were like they were pouring money into the deferred feeder cattle. It's very thin market, very tough to get out of. And the deferreds are starting to pull ahead of the front. You're starting to see that excess speculation in these markets where the front isn't even leading anymore. And then if they get that too high and they try to exit with no liquidity, then the feeders could really get hurt. But a lot of different things could happen. Watch cash this week. I've been saying that when cash tops out, this stuff's done.
Yeah, the one thing I know is that won't happen before my puts expire. So if you'd like to know when my puts expire, call John at...
We'll get you lined up with those dates now, right when they expire to get short.
Right.
We kind of got away from corn too. The action afterwards is very positive looking. But don't start looking for that 2020. They're all wrong, and it's going to go to $6, and you'll see there's no corn out there. I wouldn't be looking for that, but we've had great positive action, which shows a lot of this was in the market, which I still find hard to believe that 2 million acres in the market. I think that the next rally is going to be a rally to sell. We'll be looking at selling calls if it gets high enough, and there's enough premium there. There's two things that hasn't happened. But the rallies will most likely get sold. We might have an earlier than expected rally here because everybody thinks it's got to go down. Futures, often do the opposite of what it looks like it's going to do. Beans have a little tailwind here. They're getting ahead of themselves because we still don't have that Chinese demand.
Yeah.
But the grains look great rallying. It feels good to show up and they're not down every day. In my mind, it creates opportunities. That's what we'll be looking for. It's better than a down everyday market. But nothing jumps out at me other than it's not imploding. And beans look pretty good. Oh, the wheat corn spread starting to get out of whack. That's something to keep your eye on. Is that wheat? That's one that is down every day. But it won't be too long before they start tricking everybody into planting that. They like that nice little rally right before the plantings for the winter wheat, just to pretend like, hey, no, this is a different market. We're not going to pull the rug on you again.
It's not the poverty grass anymore.
Yeah,
we make $1.
We the Russia's looking bad. This is a real rally. We'll probably get all this demand. This isn't fake this time. And then as soon as that thing hits the ground, they just yank that rug again. But they do like to give a rally before that, and that's awfully courteous of them. The price is so low right now that I don't know how those acres are really high unless you get some sort of rally. I don't think we've gotten to the 4s in the futures, but we're flirting with it right in the front.
Yeah,
I think the front couple contracts are right off that. But if you to get to the corn wheat down to 90 cents in a year where corn's this bearish, that's something that would interest me a lot. I think it was $1.10 today, $1.15. So we're getting down there. And that's something that I am watching, but there's really no reason to buy wheat. And that's what's dangerous about that spread. It is a feed spread, but really you're buying, who are you kidding? You're buying wheat. You're not selling, you are selling corn, but you're not selling corn, because you think corn's going way lower. You're basically thinking wheat's going to bottom here. So it's a dangerous spread in that regard. But other than that, the beans have me busy. We were talking about the bull spread. We definitely got involved in that. But I still think it's a trader's market.
Yeah.
I think you're going to see these little waves up and then waves back down. Maybe the worst is behind us. What's your thoughts? You think we saw the lows?
I feel like we're heading into the same type of fall as last year. So do I want to call them lows? Not necessarily, but I foresee we have some rallying coming up. So especially the way corn performed last week, where we're looking this week after the report, it's there's going to be opportunity to market, is the way I would put it. I don't think it's big rally. I don't think it's big. I mean, man, maybe it is. Prove me wrong.
I see a different cycle than we would normally see this year. I think it's getting ahead of itself. They're saying, oh, that's the worst news. That's the worst is behind us. I think they're forgetting about the physicality that we're going to be dealing with pretty soon. And that's not a problem in most years where it does disappear. Like last year looked like it was going to be an issue. It got harvested all at once too. It was perfect weather. And it wasn't. The exports were enough to keep those channels pretty empty, whether the storage was really empty or not. This year, I'm not so sure the storage is totally empty. The commercials seem like they're bought up pretty good. There was never any sort of desperation all summer long.
Yeah.
So they might be putting the cart ahead of the horse this year, saying, "Hey, everybody thinks it's got to go down, so let's go up." The old crazy Ivan is what I think is happening in corn right now. But then the physical side of it's going to be an issue where I think it's going to snap back to reality. So in a normal year, we will have bottomed with the idea it's going to be enormous. We get over that by the end of August into September, and actually it's usually rallying when the most supplies come in. That's normal for grains. This year that might not happen because if we're going to do what we did last September, where we had that rally before it all came in for no reason, and then of course it fell. I think that same thing's going to happen. It's just different time frame. Like if we're going to rally now, that we're going to sell off. So watch out for the seasonals this year. So far, so good. The bottom usually in August, but I just once that starts coming in, I just don't see people paying up in like a rallying corn market, paying up a bunch to the farmer for something he knows he can wait and get way cheaper later on.
Yeah, I would definitely agree with that.
And that's going to be a major problem is these guys that are buying from you are going to clearly know that there's a lot out there that needs to get sold at some near point in the future. Because of the input costs and the cost of in interest, they just know it's a waiting game. It worked very well for the last 3 years. And with more corn around, why would they change their game plan?
Absolutely.
Yeah, I don't think they're going to.
Let's jump into the American federal money markets. So what do you have? Interest rates, dollar, any news on that side?
No, just some arguments about the jobs number. They have been poor. The stock market still going higher would indicate that even if there's a cut, it's well in the market already. If you were to see the stock market come off sharply, then they would start pricing in more rate cuts. And that's where I think we are right now, is that everything's holding together fairly well to be maybe one rate cut, maybe two before the end of the year. And the market's already has that priced in. You would need something outside of what we got going on near all-time high stock markets. And, not a lot of grumbling about any of the numbers. Like, you haven't seen any nasty numbers come out. The CPI is fine. Like, there's no indication that we need to start slashing rates. That's what would get the bond markets moving. That's what we'd see. But there's been talk about the deferreds going up in the front coming down. Someone placing a large bet on that. I don't know if you were reading about that last week.
I didn't see that.
So they're betting on the curve changing. Like the back end going higher and the front end coming down. I don't think that's a big surprise. That's what's likely to happen. But there's been some big bets placed on that. But overall, as long as there's not big earth-shaking news, they're going to assume one or two cuts. And then very uncertain after that. So you're seeing what you're seeing in like the SoFar futures. Not much. There's not a lot of action in any of this stuff. But give it a week. There'll be a couple stories that will trip it one way or the other. It might involve this administration, which I have to say because of the algorithms. Because it changes fast with that kind of stuff. So things could change fast with the interest rate outlook. That's where I would be at. It is what they expect it to be. A little bit, some minor cuts coming or little cuts coming. The surprise would be if it was like a half a point instead of a quarter, and it would be on that day, and then you get a large surprise. But really nothing to move the needle either direction. It's kind of settled into just being where it's at, and they haven't moved around a lot.
Sounds good. Well, we should probably wrap it up there, John, unless you have any last thoughts.
No, just I wouldn't give up on this crop. We already have a rally going. Recognizing where to do what is what you want to start concentrating on now. And then for 26, you need to start planning for that already. Not necessarily buying inputs because they're expensive, but is there going to be a window in here where it gives me a better price at a time window where you wouldn't expect it? With a lot of carry in the market, sometimes that does happen in bear years. And then we have beans to look forward to. So at least we have changing markets, very bearish in corn, bearish in wheat, and then something else in beans. So we have something to work with. So start planning for what you're going to do with this crop. And then also 26, it might come at you a little sooner than you would expect. Meaning, let's say we run up really fast in beans right now, getting ahead of itself, and we somehow get to like 1150 for November 26. Then you got to start thinking of it already for next year because of the large corn acreage this year. Other than that, I don't know. I'm sore from 36 holes of golf. I know that I don't ever need to do that again. I don't golf that often. I used to when I was younger, but I'm ready to go home and rest. That's a lot of golf.
And were you walking?
No, and it's a lot of golf for a cart. No, but I was
just giving you a hard time.
Everybody else was drinking. I would have made it walking. I meant that heat on Friday. Whoa, that was jungle hot.
It's been brutal lately.
It has been. But there was a lot of drink. I didn't drink much there. I don't need anything to make my golf game worse.
I thought it was aiming fluid.
It's actually rusty. It's not it's just rusty. It used to be acceptable.
Your game used to be acceptable.
Yeah, but I don't go very often. 36 is too much. Don't do it.
Yeah, I agree with you there. having been a PGA professional, a golf professional,
Semi-professional.
9 holes is plenty.
I like that. Yeah, that is.
I've hit enough golf balls in my life.
Yep, not long enough to get too frustrated. And if you're doing bad and if you're doing good, you want to quit so you can say, "Hey, I did really good," before it gets bad on the back 18 or back 9.
Right.
Excuse me.
Absolutely. Well, John, leave your number so people can get a hold of you.
218-731-1578.
Thanks, John.
Yep.